Treasury yields are rising today after the 10-year yield dropped below 4.5%, still below that level here this morning. We're right around 4.43 now. The move's coming on the heels of commentary that we got from Treasury Secretary Scott Bessent to Fox Business. Bessent saying that President Donald Trump is, quote, not calling for the Fed to lower rates. Rather, the administration is focusing on lowering the 10-year yield. For more is our very own Jennifer Schonberger. Hey, Jen.
Hey, Seana. Yeah, seemingly the Treasury Secretary taking a bit of pressure off the Federal Reserve. Treasury Secretary Scott Bessent saying President Trump is not asking the Federal Reserve to lower short-term rates. Instead, he and the president are looking to bring down longer-term borrowing costs via the 10-year Treasury. In an interview with Fox Business on Wednesday, Bessent said, quote, President Trump is not calling for the Fed to lower rates. When asked whether the president wants lower rates, he and I are focused on the 10-year Treasury. Bessent underscored that when the Fed did a jumbo rate cut last September of 50 basis points, the yield on the 10-year Treasury actually went up. Bessent says the president believes if the administration rolls back regulations, makes the 2017 Trump tax cuts permanent, and gets energy prices down, then rates will, quote, take care of themselves. Now, Bessent repeated his economic plan, dubbed 3-3-3, which aims for getting the deficit down to 3% of GDP from above 6% now through cutting regulation, as well as sustaining growth of 3% and boosting oil production by 3 million barrels a day. The newly minted Treasury Secretary also noted he will only talk about what the Fed has already done, not what he thinks the central bank should do from now on. Bessent's comments come after President Trump said Sunday night that the Fed was right to keep interest rates unchanged at its policy meeting on January 29th. Trump's about-face also comes after he initially criticized the Fed's recent policy decision, arguing they, quote, failed to stop the problem they created on inflation. Now, Bessent also offered some assurances about Elon Musk and Doge's access to the Treasury's critical payment systems, telling Fox Business that, quote, our payment system is not being touched. We're conducting a study. And can we have more accountability, accuracy, and traceability of where the money goes? Guys?
All right, Jennifer, thank you so much. Seana, what is really interesting about what we are hearing from Treasury Secretary Scott Bessent is that the idea of keeping the 10-year lower, you could argue, is at odds with some of the inflationary policies coming from the administration, like tariffs. This is something that, if we have that chart of the day, is something that fund managers surveyed at Bank of America are already pricing in as a potential risk for 2025. The idea that the bond market might have to price in further inflation off the back of these policies. But then he's saying he wants the 10-year lower.
Yeah, and when you take a look as to why the 10-year yield has been elevated now for quite some time, continues to be elevated. Yes, we are hovering right around the lowest levels that we've seen in just about a month, but still not far from that 4 or 5 level, and still not far, obviously, from where we had seen a recent peak within the 10-year yield. And a lot of that has to do with some of that uncertainty surrounding inflation, surrounding pricing pressures. Obviously, tariffs potentially could exacerbate some of those issues and put even further pressure to the upside there in yields going forward. So when you take that into account and also square that with some of the commentary and rhetoric coming from Bessent when it comes to his energy policy and what he wants to see there. And I think what stuck out to me is very much how much of that is more so sentiment driven versus how much of a material impact that is going to have, just given where production levels are right now with energy and how willing we are going to see some of these oil giants be in boosting their production. That's something that's very much been debated on the street right now. But he has made the argument that when it comes to lower prices, when it comes to a lower deficit, that obviously could be more of an improvement and could ultimately lower yields. You just got to question with the tariff policies coming out from the White House, with core PCE right around averaging 2.8% now for quite some time. Not too far from that 3% threshold that we've heard from a number of economists here on the program that could potentially make the Fed maybe rethink its policy going forward, could obviously add to more of that inflationary picture there down the line. So again, it very much, you could see the initial reaction in the market yesterday and obviously here this morning. But again, further digesting that news, you have to ask just how feasible it is to do that.
Especially to your point this morning, we were talking about this, Seana, the idea that energy prices are already low. So lowering the cost of energy further, while that is a key driver of consumer sentiment, that might already be as baked in as it can be. If gas prices go even lower than they're at now, I think consumers might say, okay, I want my grocery prices lower, which is something else that Trump promised on the campaign trail.